Hello everyone and welcome back to the Bitcoin for Ranchers webinar series. Today marks the third of four webinars offering basic Bitcoin education to bridge the gap between sound health and sound money for a sound future. Each of these webinars will be no more than 60 minutes long and it will include a question and answer session at the end. Just a heads up for everybody that's live in the room with us now, these sessions are being recorded, so if you do not want your voice to be shared publicly, feel free to ask your questions in the chat. I'd just like to take this opportunity for those that have missed the first couple of webinars to reintroduce myself and my co-host. I go by Bitcoin Q&A. I'm Head of Support and Education at Foundation, and presenting with me today is Lili, our Head of Business Development. How's it going, Lili?
Good. How are you?
I'm very well, thank you. Yeah, I'm looking forward to getting cracking with week number 3. They're flying by, so hopefully if you're listening to this live or you're watching this after the fact, you've had a chance to catch up with the first 2 webinars. Although if you haven't done so and you just landed here on week 3, we'll do our best to keep things as simple as possible so that you're kind of as up to speed as possible without having missed the first 2 weeks. Before we get started with today's content, I think it's worthwhile to have a very quick recap on what we covered last week's webinar, which was about self-custody. So we discussed what self-custody is and why self-custody is important or absolutely paramount when using Bitcoin. We then moved on to discuss the different self-custody methods, namely they are mobile wallets, so wallets that are on your mobile phone, desktop wallets, so again, a Bitcoin wallet that is on your computer, and then hardware wallets, which are more secure setup geared towards keeping your Bitcoin in a more secure offline manner. We we talked about the trade-offs of those and the different applications of where those types of approaches will be applicable for people who are self-custodying their Bitcoin. And then finally, we talked about the basic concepts around wallets, what is a wallet, and how you can securely back up your Bitcoin wallet and the importance of backing up those all-important private keys or seed words that we discussed. So after those first 2 weeks, now that we've got the basics covered, it's time to look at sort of putting that into practice a little bit more and looking at how you can use Bitcoin both in day-to-day in your personal lives and equally in your business life as well if you're a business owner. And then we'll move on to take a high-level look at some very slightly more advanced topics, but equally extremely useful, things like privacy and the Lightning Network. So let's get cracking with today's content, shall we? So first of all, to self-custody some Bitcoin or to be able to use Bitcoin, you need to get hold of some Bitcoin. That kind of goes without saying, really. So last week we talked about how to set up a wallet and how you can, at a very high level, how you can receive some Bitcoin into that. So we're going to go into that in a little bit more detail and sort of show you how you can do that in more detail and kind of paint that picture so that you can see it in action. So when you have your Bitcoin wallet set up, there are many different wallets on the market, all of which will look slightly different from one another, but they all work on exactly the same principles of using addresses. So you would share an address with somebody that wants to pay you, and that's how you receive Bitcoin. They would pay to your address. That can be by sharing a text string, like you can see on screen here, the sort of dark lettering. These are all common types of Bitcoin address format. Or more commonly, you might see a QR code which can be scanned by any compatible Bitcoin wallet. And there is an infinite amount of these receive addresses within each Bitcoin wallet. So essentially, to receive some Bitcoin, all you need to do is share an address with the person that wants to pay you. That's enough for them to simply send you some Bitcoin. So let's take a look at that in practice. So here we have Blue Wallet, which we covered off last week, the basics of it. So we've got the initial wallet set up here, which we covered off last week. Excuse me. So I'm just going to show you the quick flow of how simply it is to, once you've got that initial wallet set up, to receive some Bitcoin. So hopefully if the video plays, so we're going to open the wallet, tap receive, and there is our text string and the QR code. That's all we need to share with the person that wants to pay us. Dead simple. If you were to tap on this address string, it copies it to the clipboard on your phone so that you can send it via any method. If you're not in person with the person that, if you're not in the same room as the person that wants to pay you, you can send this via, Telegram, Signal, text message, whatever it is, to get that address to them, and then they can populate that into their wallet and send you some Bitcoin. So once you've done that, and they've sent the Bitcoin, you just give the wallet a quick refresh. And there we go. We can see the transaction is pending and it's just waiting for process by the Bitcoin network. If we tap on the details there, you can see a rough estimate as to how long that's going to take. In this instance, it was 3 hours, but that's completely dependent on the fee rate that the sender uses to pay you. So really simple so far, nothing to write home about. We've literally hit receive, we've shared a QR code or an address string, and the person has sent us some Bitcoin. After a small wait, there we go. We can see it go green, and we've got some confirmations, which basically means that the transaction has been processed or it's been confirmed, is the terminology that's commonly used. And that's it. You've received some Bitcoin in 3 simple steps. Could not be easier. Now sending Bitcoin. So we've got our hands on some Bitcoin. We've demonstrated how easy that is. So let's demonstrate how easy it is to send. It's pretty much the the reverse process. So again, this is going to be somewhat dependent. The exact steps are going to be somewhat dependent on the wallet that you use. We're going to demonstrate Blue Wallet for this one, just because it's a really simple and easy to use wallet interface. So it's kind of the reverse. All we're going to do is we're going to scan the QR code or paste the address of the person that we want to pay. We're going to enter how much we want to pay them, obviously. We're going to choose a fee rate, which essentially dictates how quickly we need the transaction to be processed. And then we're going to authorize it. And we're just going to say, yep, I'm happy to send that. I'm happy with the details. I'm going to press send. Generally speaking, once you've pressed send, Bitcoin is a push system, so that once you've broadcast that transaction, it's essentially, once it's been processed, it's deemed as final. There are some caveats to that, but these are more sort of advanced topics, so we just go with the general consensus of once you have broadcast that transaction, it's essentially finalized. And finally, there may or may not be a change output that comes back to your wallet. So to give an analogy on this one, let's say you walk into a store to buy some chewing gum for $1, and you have a $10 note. The cashier is going to give you $9 in change back into your wallet. Bitcoin is exactly the same. You just get whatever change is rightfully yours back into your wallet. So let's have a quick look at that in practice with Blue Wallet. So I'm just going to rewind that. So we've got the Bitcoin that we've just received here. So all we're going to do is click on send. Should catch up with me in a second. There we go. So we've hit send. We are then going to populate how much we want to send. So we can either manually type in, the amount of Bitcoin that we want to spend, or we can type in the amount of US dollars. Or we can opt to choose the full wallet balance. If, in this instance, I did that because we only had a small amount. Then we're going to hit next. In this instance, I'm scanning the QR code of the person that I want to pay. Equally, again, we could have just copy and pasted the address string in if somebody had to text us the address. Then I'm just writing a small note to myself as to what this transaction is for. In this instance, I've called it demonstration send. Finalizing the transaction details, checking that I'm happy with everything, and then I'm just going to hit send now. And there we go, transaction broadcast, and the recipient is just waiting for a single confirmation to ensure that that Bitcoin transaction has been processed. Again, after a short amount of time, usually around 10 minutes, the recipient will see that that's been confirmed into their wallet, and I will see the opposite here, and you can see that's demonstrated by a minus to show that I've debited my Bitcoin account of that amount that was been sent. So really, really simple. As I said, you touched on earlier, the exact steps will vary from between different Bitcoin wallets, but as you can see there, in sort of 4 or 5 steps, we've received and sent some Bitcoin, and it's really not as difficult as you might have thought.
So Bitcoin is a great asset to integrate into your business. As we just went over, you can easily accept payments. You can put Bitcoin on your balance sheet. So a lot of businesses, they choose to invest in projects or other assets. Bitcoin is one of those assets. What's nice about Bitcoin is you can also use it as loan collateral. Now, Bitcoin is pristine collateral, meaning it's very easy to lend against, even easier than using your car. I, I lost screen. Okay. So we're gonna go into more detail later in the webinar. Um, there's also shared custody option for using Bitcoin on your balance sheet, meaning that you don't have to hold the only key. You can have a multi-sig setup and have more than one key to sign, which we did cover in the previous webinar. You can put Bitcoin in your IRA. So in the US, there's two types of IRAs. There's a traditional IRA, and with a traditional IRA, that reduces your taxable income. So if you make, for example, $50,000 a year and contribute $5,000, your taxable income will be $45,000. You can also do a Roth contribution. So that means that you still have to pay tax now. So it's an after-tax contribution. But that means that later at retirement, all of those capital gains will not be taxable. So you get to keep everything. Now there's a lot of great products that let you put Bitcoin in your IRA. So Choice by Katie has a good one, and that lets you put your stocks and your Bitcoin in one account. If you want to choose a collaborative custody solution, you can use Unchained Capital's IRA product. Okay, Q&A, you can move to the next slide.
Oh, good. I think my connection just quickly dropped, and just checking you can still see my screen.
Yes, I can.
All good. So Lily's briefly covered some high-level stuff there on how you can use Bitcoin in different methods for your business. Obviously, the obvious one is accepting Bitcoin for payments, as Lily touched on earlier, in a commerce fashion. So why might you want to do that? So number one, you can remove trusted third parties. So, but as we touched on in webinar number one of the fundamental principles of Bitcoin is a peer-to-peer network protocol, so that if, say, you have a business and somebody wants to pay you for the goods or services that you're selling, when they pay you in Bitcoin, they do that directly in a peer-to-peer fashion, directly from them to you. So you don't need to rely on Visa or any similar payment processors to be able to get hold of that Bitcoin in return for those goods and services. And obviously with that, because you're not having to rely on those third parties, you're also not going to have to pay those third parties because you're kind of cutting them out of the scenario. So if you're a retailer that's doing a significant volume and paying, anywhere between 1 and 3, 4, 5% on those credit card processor fees, shifting to a Bitcoin standard could be a significant saving for that, which potentially you could pass on as savings to your customers, or equally, at the same time, increase your profits as well. By accepting Bitcoin, you can also open up to the global market. Bitcoin is a global asset. You can access it just as easily as you can in the Antarctic as you can in America or in the UK or in Australia. The network does not charge by how far you're sending the satoshis across the network. It has no concept of borders, etc. So you might, although you may be a retailer within the US, it's just as easy for somebody to pay you from the other side of the world as it is to somebody to pay you in person. So you can open up immediately to a global market if your business model suited that. Bitcoin, as I touched on in the previous slide, is a push system. So by that we mean once that transaction is broadcast and has been confirmed into your wallet for those goods and services, there is no method for the sender to kind of charge back as there is with credit cards. And unfortunately, we see chargeback fraud is unfortunately susceptible to be high, especially in the US. So with Bitcoin, you completely eliminate that. Once the Bitcoin is in the wallet that you control, that's it, it's yours. Bitcoin also offers faster final settlement. So what do we mean by that? Because you may be thinking, well, if somebody pays me by credit card, the money is in my account straight away. Or if I pay, if I go and buy some beers and I tap my card on the reader, that's it, it's settled, it's final. whilst it may seem that way to the end user, unfortunately, that especially with credit cards, there's anywhere up to a 90-day window where that transaction can be reversed. So whilst it might seem final from a user perspective, it's definitely not from a retailer and a transaction processor perspective. With Bitcoin, on average, a block, or the average amount of transaction processing time is every 10 minutes, and once that's it, once that block has been processed and those transactions are deemed final, that is literally final settlement. So when you compare 10 minutes to potentially up to 90 days with credit cards, there's quite a significant gap there. And obviously, Bitcoin has no physical being. So if you are a cash-heavy business, switching to a Bitcoin standard, or at least part of your payments being in Bitcoin, you would reduce the cash management overhead of that. So that could be security, or that could just be sort of the mental fatigue of having to go to the bank and manage your float and manage your cash flow, and ensuring that you haven't got too much physical risk on site. With Bitcoin being completely digital, you can have an app on your phone or a hardware wallet in your safe at home, and it doesn't take any more room to store $10 or $10 billion. That's the beauty of it being 100% digital. Now, accepting Bitcoin for goods and services in your business is not without its trade-offs, of course. So I'm just going to quickly cover those off here. So number one, increase personal responsibility. Obviously, with Bitcoin being a peer-to-peer network, once those Bitcoins are in your wallet, they are solely your responsibility. If you lose the backup, lose access to the wallet, all of the issues that we talked about last week with the self-custody, then that is wholly your responsibility. So again, there's no Bitcoin help desk, or there's nobody you can call up if you lose your seed words, unfortunately. So with great power comes great responsibility again. If if your outgoings or your business costs are heavily based in US dollars or any fiat currency, obviously, as we've seen in recent weeks, the exchange rate can be sometimes volatile in both directions, up and down, and that may not be palatable for certain business owners, which is completely understandable. Being able to accept Bitcoin is you're going to need some form of new infrastructure to be able to do that. Now, that might be something as simple as a mobile wallet on your phone, which the overheads are almost zero, or that could be the headache of maintaining your own server with its own software on it, depending on how far you wanted to take that and what features you needed, some of which we're going to come on to later. Now, of course, with any new payment method, you're going to need to be able to train your staff. That goes without saying. And just a final caveat there of beware of PayPal 2.0 offerings, or essentially, to break that down, beware of Bitcoin versions of middlemen that offer to help you be able to create help you to receive Bitcoin for your goods and services, but also charging exorbitant fees and kind of being the middleman, rent-seeking middleman that we are just trying to get rid of by Bitcoin being a purely peer-to-peer network. So let's say you've weighed up the risks and the trade-offs, and you decide that you want to accept Bitcoin for your goods and services. There's three main methods that you can do for this one. Number one is you can just have a single static Bitcoin address that you can kind of put on a piece of paper and as a QR code and put it on the front of your payments desk, and you can receive all your payments into that. Now, whilst that is extremely easy and you can do that in 5-10 minutes, it's terrible from a privacy perspective, and I'm going to come on to that more later. So just to summarise, I would not advise anybody to do that. The second method is known as the manual method. So that could be, again, you have a mobile wallet on your phone, and every time somebody wants to pay you in Bitcoin, you open up the app, you tell the app how much you want to receive, and you show that QR code to the customer. Now, this is actually not a bad approach, especially if you're going to be doing fairly low volumes. Unfortunately, it doesn't lend itself well to online commerce, where the customer's going to have to sort of contact you, say, I would like to pay in Bitcoin. They're going to have to hope that you're online and be able to contact them back and say, yeah, here's an address, you can pay me. So while it's great for in-person, where you've got that physical or that in-person relationship with the customer, it doesn't lend itself well to online. And then there is the sort of hosted alternative, where you can these are the sort of the PayPal 2.0 sort of payment processing companies that will kind of do it all for you, make it really easy, but they're going to charge you a percentage fee on top of each transaction, much like Visa do. So these hosted alternatives such as BitPay or OpenNode, they do make onboarding quite easy, but just be mindful of the percentage fees that you're going to pay each time you receive from them. So there's a little bit of trade-off there to weigh up. The final option, which comes with a little bit of a bigger barrier to entry, although I will be honest, it is getting much easier with the way that the software has been developed in recent years, and that is a self-hosted payment processor. So this is essentially you hosting your own Bitcoin storefront, so that you can receive both online and in person really easily, and with all of the typical sort of storefront or payment processor features that you would expect from any sort of US dollar payment processor. This is going to be able to produce receipts, refunds, stock management. It lends itself perfectly to in-store and online, so you don't have to be physically present at your computer to be able to take a payment. It's going to manage it all for you and run 24/7 in the background. And it does come with popular website plugins. So if you run like a WooCommerce store or a similar one like that, then the chances are that this self-hosted payment processor, which goes by the name of BTC Pay Server, is going to have a plugin so that it can talk to that website pretty easily. As I say, whilst this is absolutely the best way that you can opt to accept Bitcoin for goods and services, it does come with a little bit of a steeper barrier to entry, and you're going to be able to, it's not going to be a 10-minute setup. You're going to have to dedicate a couple of hours to this, but in the long run, in my opinion, it's absolutely the easiest way, especially if you're doing online commerce or you're doing sort of larger volumes.
So I just wanted to expand on what we covered earlier about Bitcoin loans. So Bitcoin loans can be used as a business expansion method. So if you want to expand your business, but you don't want to sell off your assets, you can put up your Bitcoin as collateral and receive a loan. A lot of times it's usually half of the amount of Bitcoin is how much they're going to give you as a loan. And then you can do this without creating taxable events, so that gives you the advantage of keeping your Bitcoin and taking advantage of Bitcoin's upside while still being able to expand your business. The only thing to be careful of is over collateralization of that loan. So don't use your whole Bitcoin stack to acquire a loan, because if the price of Bitcoin drops significantly, just like it just did, then you're going to have to put up more Bitcoin to avoid getting liquidated, which means they're going to sell your Bitcoin to cover your loan. The best time to take out a Bitcoin loan is during bull markets when the price is running, or like right now, while the price is just kind of sideways. There are two ways you can get a loan. So you can do it through a centralized provider like Unchained Capital or Let-In, or you can do this peer-to-peer using HODL. So that's when you're lending from somebody else. And then a lot of times with the peer-to-peer lending, it's collaborative custody, so you still get to hold one key instead of just depositing all of your Bitcoin with one custodian. You can move to the next slide, Q&A. No one has questions.
Thanks, Lily. Yeah, so moving on to Bitcoin privacy. So touched on this at a very high level earlier, when I suggested that reusing Bitcoin addresses is not a good solution. And the reason that is a bad solution is because the Bitcoin blockchain, which is where all of the transactions that have ever taken place and ever will take place on the Bitcoin network are stored, anybody can access this data. So by reusing the same Bitcoin address over and over again, you're essentially making it really easy for anybody that, let's say I walk into your store and I buy a beefsteak from you for $10, and I pay you at that single fixed Bitcoin address. I then know, if you're not changing that address, that I can sit and watch that for the next 10, 15, 20 years if I want to. If you never change that, I can see exactly how much you're earning. I know exactly how much you're getting paid and when you're getting paid. So that's why it's really important to make sure that you don't use the same address more than once. The beauty of modern Bitcoin wallets is that, generally speaking, once you use an address, they will sort of hide that from your view, not so that you can't access it, but just so that you can't easily receive to it again without manually sharing it with the same person over and over again. So, as the slide says there, so the Bitcoin blockchain is completely public. So each time that a transaction is made, it's easy to see which address is spending, from which address is being spent, and to who the recipient or what the addresses that are receiving the Bitcoin are for. Now, there are chain surveillance firms that literally make a living from trying to track all of the flows of funds, to sort of cluster them together to essentially work out who's paying who on the blockchain. Now, they do this through something called heuristics, which is essentially they assign a probability of where they think the funds have flown from A to B. Now, because there are no names on the blockchain per se, that's the reason that they can only assign probabilities to these outcomes of where the funds are flowing from A to B to C and so on. So there are ways that you can mitigate against this to sort of regain some of that privacy. Number one is obviously don't reuse addresses, which I've just covered off. Number two would be to use the right wallet. As I touched on briefly earlier, most modern Bitcoin wallets will, by default, not enable you to reuse Bitcoin addresses. Some of our favourites would be Samurai Wallet on mobile. We also mentioned Blue Wallet, which is pretty good from a beginner perspective. And if you prefer desktop wallets, Sparrow Wallet is a great one. Another way to increase your Bitcoin privacy is to run your own node. Now, a node is essentially a Bitcoin computer that enables you to talk directly to the rest of the Bitcoin network, so that you don't have to broadcast and receive your transaction through somebody else's Bitcoin computer, and thus giving you an increased level of privacy. The next way that you can regain some privacy is to take part in what's called a coin join. Now, the two wallets listed on screen, Samurai and Sparrow, both enable this. And a coin join is essentially a collaborative Bitcoin transaction where multiple participants will pool their coins together to essentially pay themselves back the same amount, but the transaction is constructed in such a way that it's very, very difficult to determine which input or which initial participant is paying which output participant. So it kind of it's quite analogous to sort of covering your tracks, if you like. If I was to give a separate analogy based on US dollars, imagine you and 5 friends throwing a $10 note into a bowl and then picking one of those back out at random. It'd be very difficult to tell which $10 started at who and went to which recipient. Our first webinar, we talked about obtaining Bitcoin via no KYC methods, which is essentially obtaining Bitcoin from a method where you don't have to provide your real world identity, passport, selfie, etc., etc. And the final one is spending via Lightning, which I'm going to come on to in a second. So the Lightning Network is a scaling solution, or a layer 2, that is built on top of Bitcoin. It enables cheaper and faster payments that are anchored into the Bitcoin network. So we talked about the Bitcoin network taking on average 10 minutes to finalize transactions, which for in most scenarios is absolutely fine. But let's use the scenario of purchasing coffee at a coffee shop and there's a big long queue. You don't really be wanting to wait 10 minutes for that transaction to process whilst you're waiting for your latte. Well, if we were to use the Lightning Network, that would be for all intents and purposes would be almost instant, or within a couple of seconds. And the way that the Lightning Network at a high level sort of achieves this is through a series of payment channels, where if you can think of it like the concept of 6 degrees of separation, in the fact that everybody is sort of connected at least no more than 6 hops from one another in some way or fashion. Now the Lightning Network works in exactly the same way, so that using the example on screen here, where Alice wants to pay Dan but has no direct relationship with Dan. So the way that the Lightning Network works is that Alice would have a direct connection with Bob, and she could say to Bob, Bob, I want to pay somebody else 10,000 sats. I'm going to give you a couple of sats if you pass this message on to the next person in Dan's direction, who in this case is Carol. So if you pass this message on to Carol, I'll pay you a couple of sats. So Bob does that and then says the same to Carol, says, Carol, can you pass this message on to Dan? And I will incentivize you with a couple of sats if you do that. And as you can see here, by that sort of is 4 degrees of separation in this example, Alice is able to pay Dan without having a direct connection to him. Now, of course, this does add increased complexity to on top of Bitcoin, which is arguably already a certain level of complexity. But there are some simple ways that you can actually get started with the Lightning Network so that you don't have to deal with all of these different channels. So let's take a look at those. So the easiest way to get started with Lightning Network is a custodial one. But the problem is, as we established last week, custodial solutions are essentially what we already have now with Visa, MasterCard, etc., where the banks are holding our money and we ask permission to use our own money, if you like. So the more desirable one would be to use a non-custodial solution. So there are hybrid non-custodial solutions. Now, it doesn't really matter sort of from a technical perspective for this purpose of this webinar, how that works under the hood, but there are wallets such as Breeze and Phoenix that enable you to access the Lightning Network in such a way that you are in control of the funds, but they obfuscate all of the difficult sort of channel interaction that we sort of talked about in this slide. They will sort of take all of that away, hide it under the hood, and just do it on your behalf for a small fee. So if you were looking to get started with the Lightning Network in a fashion that is more suited to the way that, in my opinion, Bitcoin is intended, then Breeze or Phoenix are a really great way to get started. And then as you get a little bit more advanced, you can do a sort of fully non-custodial approach, such as BTC Pay Server, which we touched on earlier as a payment processing method, or you can use a wallet like Zeus that connects to your own Bitcoin computer, so that you can sort of pay via the Lightning Network in a really self-sovereign fashion. So to summarize, I would get started with something like Breeze or Phoenix. They make a really shiny, polished user interface that enables you to send and receive over Lightning without having to deal with the headache of channel management and dealing with all of that sort of more technical stuff. Just to drive that home a little bit more in terms of how we can use Bitcoin in our commerce setting. Once again, as always, there are hosted solutions, that are essentially middlemen that will take a fee. Their business at the end of the day, they will take a fee, and they will allow you to send and receive via Lightning in a commerce fashion. But obviously, they will be taking a percentage of all of those fees. They will require you to provide multiple forms of ID to be able to interact with that service, but they will generally give you quite a polished user interface. So want to weigh up the trade-offs with there. And then we have the manual solutions such as Breeze, which are essentially non-custodial, but they manage the channels for you. They do take small fees, but obviously this approach does take a manual interaction. So these types of wallets are all phone based, so they don't bear themselves pretty well to online commerce settings where somebody wants to pay you from the other side of the world, because you're going to have to have that manual interaction to say, okay, here is my Lightning invoice, can you pay me this amount of Bitcoin? So if you wanted to do it in the most sovereign way, we're back to BTC Pay Server, that self-hosted payments processor, or there is an alternative called SatSail. Both of these pieces of software will essentially do the same. They'll have the same output. They'll enable you to do the same things, and that is send and receive Bitcoin for your goods and services. Now, this is the one, or the two or three truly sovereign ways to approach this. There are no trusted third parties here. All of this software is completely free and open source. They take no fees whatsoever. You don't have to provide any ID. And if you set these up correctly, they're always online, so that you don't have to be if somebody wants to pay you in the middle of the night from the other side of the world. Of course, with it's not all green roses, unfortunately. There are some considerations, and those are the channel management, which I touched on earlier, the liquidity management. So at high level, liquidity management is ensuring that you have the correct amount of Bitcoin to enable you to send and receive from the Lightning Network. And that's due to the nature of how the network is built, is that you can't just kind of set it and forget it. You have to ensure that you have enough Bitcoin to be able to send and both receive it at the same time. And of course, if you have a 24/7 server running to enable payments from anywhere at any time, you're going to have be able to have the skills and knowledge and the time to maintain that server as well. And that brings us to the end of the whistle-stop tour of Bitcoin Commerce, Bitcoin for Business, a brief look at Bitcoin privacy, and also a quick look at a very high level for the Lightning Network. So, Lili, is there anything you wanted to sign off with? I just want to thank everybody for joining us and pause for any quick questions if there is anybody that wants to pop their hand up or write anything into the chat to ask any questions.
Yeah, I just wanted to say thank you guys for joining us. The first two webinars will be available for replay this week, so keep out for that. And then if you have any questions, of course, feel free to DM Q&A or myself. Find us on Twitter, or send an email to the Beef Initiative, and we can get back to you that way.
Great stuff. I'm not seeing any questions pop up, so at that I will thank everybody for joining us, and I will speak to you all next week for the final webinar. Thanks everyone.